I'm Pete McKenna from Modera Wealth Management. I hope you're doing well today. Today we're going to be talking about tax planning for 2020. And it's important to acknowledge that this isn't tax advice. The only person who can really give you good tax advice is your tax professional. But we're talking about planning out the things that need to happen for you and understanding your tax situation to see if this might be an opportunity for you. And your tax professional will know the laws better than us, and they'll know what your personal tax situation is and put it all together into the right plan for you. So why is this important in 2020? Well, for one thing, our federal deficits are big and growing. There are planned deficits due to the Tax Cuts and Jobs Act, and there's a ton of spending going on because of the pandemic. And eventually these bills will have to be paid by someone, and unfortunately, our clients are some of the ones who are going to be asked to pay this bill in the future. Right now, another reason why it's important is your 2020 income may be lower than it was in years past or maybe in the years ahead. And it could be because you didn't have to take your required minimum distributions from your retirement accounts this year. Maybe your business income is off, or maybe your compensation from your employer is off. That's another reason why 2020 may be low, and it's good to pull money into or income into 2020. And the third reason is that we have these historically low tax rates from the Tax Cuts Act from a few years ago. And they're all scheduled to revert in 2026 if nothing else is done. But we also have an election coming up, and there's a really good chance that in November, if things change, the tax regime in Washington could be very different as soon as next January. So, what's the standard practice around taxes? We typically look to delay taxes and defer the gains as long as possible because a dollar paid in taxes today is more expensive than a dollar paid in taxes at a date in the future. But right now, the tax rate savings could be enough to compensate you for paying that tax earlier than you really have to. So the range of rates are pretty significant. It's from 0 to 37%, and it's been higher. The high end has been higher in the past and maybe in the future. So if your tax situation is such that you are paying 24% or less on your ordinary income or 15% or less on your capital gains, certainly in a place where you may want to try and fill those brackets and make sure you take advantage of those lower rates. So how can you do that? Things you can do are you can accelerate income into 2020 or delay deductions until 2021. So things you can do if you're a business owner, you may want to delay some of your business expenses until 2021. If you're an individual, you may want to consider doing Roth conversions or even Roth contributions to get more tax-free assets in your mix. And that may have advantages for estate planning as well. And then the third thing is you may be sitting on assets that have appreciated in value over time, and maybe this is a good time to consider selling them, recognizing the gain, and paying the tax at a lower rate. Just all food for thought for you. So what is it that you should do right now? I recommend you reach out to your Modera advisor, talk to them about your situation, talk to them about this tax situation, and see if there's a way you guys can plan to create a conversation or start a conversation with your tax professionals. I hope all's well and you have a good day. Thank you, and thanks for your time. Bye-bye.